Hey there, ever wondered where to invest if you're looking to build serious wealth over the long term? Whether it's gold, Nifty, or the Dow Jones, the choice can feel overwhelming. In this video, we'll break down what would have happened if you had invested in each of these over the last 30 years. And we'll also explore two popular investment methods, SIP and lump sum. Let's dive in. Important to note that this is not an investment strategy or advice. Invest wisely and seek professional advice. First up, let's get a quick overview of gold, Nifty 50 and Dow Jones and how they've performed on average. Now keep in mind, these are broad averages based on historical returns. Over the past 30 years, gold has given around 8% returns annually. Not bad, right? Meanwhile, the Nifty 50 has provided around 12%, and the Dow Jones about 10% per year. These numbers are estimates, but they show the general growth trend over the long term. So here's the big question. If you were putting in a monthly SIP of 10,000 rupees or made a lump sum investment of 10 lakh rupees, how would each of these assets perform over different time frames? Let's start with the SIP of 10,000 rupees every month. We calculated how much your SIP would grow over 5, 10, 15, 20 and 30 years for each asset. In 5 years, if you invested in gold, you'd have around 7.29 lakh rupees, with Nifty around 8.3 lakh, and Dow Jones about 7.65 lakh. Not a huge difference yet, but Nifty's already leading. Over 10 years, gold would grow to around 18 lakh, while Nifty rises to 22.19 lakh, and Dow Jones to nearly 20 lakh. So Nifty's lead is increasing. Over 15 years, gold reaches about 33.76 lakh, Nifty 47.15 lakh, and Dow Jones roughly 39.84 lakh. You can see Nifty really taking off here with a nearly 50% increase over gold. At 20 years, gold gives around 56.9 lakh. Nifty jumps to 91.12 lakh. And Dow Jones reaches about 71.8 lakh. Nifty's advantage becomes even clearer over longer periods. At 30 years, gold reaches about 1.4 crore. Nifty soars to over 3 crore. And Dow Jones ends up around 2.06 crore. Here, Nifty absolutely dominates, more than doubling gold's return. So based on SIPs alone, it's clear that Nifty 50 has outperformed over the long term, especially for those who invested consistently over decades. Now, what if you had made one-time lump sum investment of 10 lakh rupees? Let's see how these results stack up. In 5 years, gold would grow to 14.69 lakh, Nifty to 17.62 lakh, and Dow Jones to around 15.68 lakh. Nifty is already yielding much higher returns. After 10 years, gold reaches about 21.59 lakh. Nifty shoots up to 31.05 lakh, and Dow Jones stands at roughly 19.98 lakh. Once again, Nifty is outshining the other assets. In 15 years, gold would be at 31.72 lakh, Nifty at 54.73 lakh, and Dow Jones around 39.84 lakh. The gap only widens as we go on. In 20 years, gold rises to about 46.6 lakh, Nifty to 96.46 lakh, and Dow Jones to 71.8 lakh. Nifty nearly doubles the return from gold. After 30 years, gold would grow to 1.01 crore. Nifty would explode to nearly 3 crore, and Dow Jones would be at 206 crore. Again, for a lump sum investment, Nifty is the clear winner over the long term. So, what's the takeaway? For longer investment periods, think 15 years and up, Nifty 50 stands out as the highest performer in both SIP and lump sum investments. That said, if you're risk-averse or want stability, gold still provides solid returns, but won't match the potential of equities like Nifty. Which strategy is better, SIP or lump sum? Well, if you have a large sum of cash, lump sum investing allows compounding and to start on a bigger amount from day one, which can lead to incredible growth over decades, especially with something like Nifty. However, SIPs are ideal for those who want to invest gradually, avoid market timing risk, and benefit from cost averaging. So whether you go for a lump sum or a SIP, or prefer gold, Nifty, or Dow Jones, it all comes down to your investment goals, risk tolerance, and time horizon. Thanks for watching. Hopefully, this gives you a clearer picture of how each choice can shape your financial future. Happy investing!